U.S. equity markets have mostly delivered gains for investors in 2024 through mid-February, extending the 2023 rally that accelerated at the end of October. In our view, investor sentiment remains high due to investor expectations that the U.S. economy has avoided recession for now and is on a path for a soft landing or even better, and inflation in the form of consumer prices has moderated. Both of these trends allow the Federal Reserve Bank, or Fed, to soon start the process of lowering short-term interest rates. The Consumer Price Index, or CPI, a measure of consumer inflation, increased 3.1% year over year in January 2024, matching the lowest annual increase in 33 months and a significant improvement from the annual peak 2 years ago of over 9%. And the Fed sees continued improvement and recently estimated inflation would be at 2.4% by the end of this year. But still, interest rates remain volatile. Interest rates in the U.S. fluctuate, largely due to market forces, but the Fed exerts some control over very short-term rates by setting a range for its overnight Fed funds target. From 0% in early 2022 through mid-2023, the Fed raised the Fed funds target to a range of 5.25% to 5.5%, where it remains today. But late last year, the Fed said that it expected to begin lowering the Fed funds target in 2024. The market-traded yields quickly dropped following the Fed's intended policy change, and in December, yields on the 2-year U.S. Treasury note dropped to below 4.2% from 5.2% just 2 months earlier. But recently, in mid-February this year, yields were back above 4.6%. We still believe the Fed will begin lowering short-term interest rates this year, but the first cut might not be until May or June, and the total cuts in 2024 might only now be 75 basis points. That would take the Fed funds target to 4.5%. So what does a potential Fed funds target of 4.5% mean for equity investors? We think that remains a fairly high interest rate that could restrict economic growth, but can also limit inflation. Overall, not a bad environment, and one that is cautiously optimistic. For specific recommendations and strategies, please contact your D.A. Davidson financial professional.